When the Fed gave us that beautiful quarter-point rate cut earlier today, they mentioned that business investment had weakened since their last meeting in July. I've told you this before, our consumer economy is solid, but our business economy is more, let's call it a mixed bag. For a while now, the bears have been salivating over the idea of a possible corporate investment slowdown, especially slowdown in tech spending, which has been elevated for years. If you're an executive and you think we're headed for a recession, maybe you cut back on your technology budget, protect your margins. But here's the thing, if the bears are right, then how the heck did Tech Data, one of the world's largest wholesale distributors of technology products and services, report such a fabulous quarter 3 weeks ago? This company's a gigantic supermarket of technology, certainly with high skills, and their numbers were so incredible that the stock surged nearly 16%. Single session, flying from 81 to 95, and now it's at 103. I wouldn't be surprised it's got more upside. Do not take it from me. Let's dig deeper with Rich Hume, and Rich is the CEO of Tech Data. We've got to find out more about his company's doing. Mr. Hume, welcome back to Mad Money. Good to see you.
Jim, good to see you.
Have a seat. Okay,
Thanks for having me back.
Absolutely. Let me ask you something.
I appreciate it.
How come, in the midst of all this Sturm and Drang and people saying that we'll probably have a recession, worldwide things doing badly, every geography that you had reported better than expected? How's that possible?
Well, I'll tell you, we are privileged to have a very wide and broad portfolio from a couple of dimensions. First, geographic diversity. Second is product portfolio that bridges from the PC ecosystem to the most sophisticated data centers. And third, we have 125,000 customers, mostly concentrated towards SMB.
Right.
So we find that to be a really good market right now.
Now, the small and medium-sized business typically should be more worried than they are, but it seems like that they're spending, maybe because when I go on your website, you have good prices.
Yeah. Well, you know, anecdotally, we believe that SMB is much stronger than large enterprise at this point in time, and we're taking advantage of that. And again, it's the diversity of 125,000. And oh, by the way, in tech, something is always hot.
Right.
So, you know, we have a flexible sales force that's able to move to where the demand is quite quickly and take advantage of that.
But I don't know about, maybe everything's hot. You call out software, services, networking, hyper-converged technology, PC, security. These are all good. How's that? That's not bad.
No, that's right. So we're again privileged to represent the best of the best in our portfolio. So we have excellent vendor relationships. And even within those big categories, something is hot. So the categories are large enough and the portfolio is large enough to take advantage.
Sometimes, Rich, I think that you're the only one that has conviction. You were in there buying stock the whole time. People were fretting. You were buying.
Oh, we're very confident in our company and where we're going. So yes, we like our future and we like what we see. So, you know, our board authorized starting last October over 3 different authorizations, about $500 million, and we've actually acquired back $275 million at the close of our last quarter. So we like our stock.
Well, you should, and I think that what happens, people should understand, when you buy back stock as aggressively as you have, when you get good news, you see what happens. You get that spike. Now, you're doing a lot of things right. You're investing next-generation investments, strengthened end-to-end portfolio, transfer to digital, optimizing global footprint. How do these turn into higher earnings per share?
So, Jim, it's our point of view that digital transformation is the big market mover, and it will go. We're in the 2nd or 3rd inning here. This is going to go for a decade, right? And oh, by the way, when you back it with 5G in the future, it really is going to go to a new and different level. So there's great opportunities there. But, you know, we're very focused on cloud, analytics, IoT, security, and services. And we believe that those are the growth areas for the future moving forward.
Now, I want people to understand, when you have all the 100,000 clients, it isn't like you can, you're not Best Buy. You don't go and look up for something, a chip. You don't go and find a Western Digital chip for the individual, right? I mean, I want people to understand that. Right. This is much more high level.
Absolutely. So, you know, we participate with our business partners in the most complex data center deployments. So we can go all the way from the PC ecosystem all the way up to the cloud, the hybrid cloud, and all of the new technologies within the data center.
Now, you also talked about Huawei. I mean, you have some representation with Huawei. I think it's chiefly Europe, I guess, but it sounds like that things are okay. Man, listen, when someone mentions Huawei, my ears perk up. I say, okay, we're going to hear that this is the destruction of all capitalism. But you just kind of treat it as like business as usual.
Yeah, so we represent Huawei in Europe, and we focus on their mobility portfolio. And if you go take a look at the the results in Europe. Huawei is quite a participant in the mobile cell phone space.
Yeah, it seems like the ideologically Huawei's an enemy here, but in Europe, I mean, you have Huawei. They're actually taking share from Nokia and Ericsson. The Europeans seem to be a little agnostic about where they buy something.
It seems that way. The demand remains strong for that mobility in total in Europe, and that's a piece of it for sure.
So what do you think? You must be listening. You hear the same downbeat stuff I have, recession, people worried. You look at your order book every day. It is broader than almost any other company. You're just not seeing that, are you?
No. We, on the average, ship and bill about $150 million each working day. And so, again, we move to where the demand is, and we are blessed to have a very broad portfolio. So we have the opportunity of really moving to where the demand is in the market.
All right, one last question. How do you ship your stuff to your clients? Because I'll tell you where I'm going with this. You use what kind of shipping company?
So we use a variety of shipping companies, and our supply chain is very efficient. We'll even do a lot of drop ships from our vendor to our business partner right to the end users.
Okay, it's important because I listened to FedEx last night, and I kind of wanted to slip my wrist. It was so downbeat. But you make me feel like, and this is something I've talked about on the show, that maybe before you jump to the conclusion that things are bad, you should look at how Tech Data's doing, because you have a very big panoply of everything.
Yep, we just keep focused on our strategy and our execution, and we see lots of good opportunities in the market.
I wish you were a coach in the NFL. I'd be betting with your team. That's Rich Hume, CEO of Tech Data. They did everything right, and they believed in themselves, and therefore they made a lot of money for shareholders. Mad Money's back in the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.